This is On The Charts with Nick Reg, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
Information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 211 for the week ending June 23, 2017. In Australia, the banking sector continues to be a drag on the broader market, with yesterday's announcement from South Australia imposing its own state bank levy on top of the federal levy, and that's doing nothing to improve investor sentiment. One thing to consider is whether the other states are going to follow suit. One state in itself won't have too much of an impact on the banks, but if all states join in, then quite the negative reaction may well be seen. The ASX 200 continues to meander sideways within a reasonable tight trading range. We expect this to continue before the next leg lower kicks into gear. The pattern progression we're watching also adds weight to the case for more sideways churn over the coming weeks. We'll then be focused on follow-through and what that may mean for investors in both the near term and the longer term. During May at the Chartist, we ran Big Picture Week. Members can go back through the Big Picture charts in the ASX and Global Chart Research sections. And during that week, starting 15 May, we reviewed the large degree patterns in Commonwealth Bank. The monthly chart back then showed that the pattern progression was looking very good, with a recent pivot low locking in a major low. Looking back to the daily timeframes, we now want to see the smaller degree patterns add weight to the more bullish longer term outlook. Price has bounced strongly off the zone of support made back in September. Price action was also impulsive up to the recent daily highs, which is also a positive. The problem for us over the last few months has been the potency of the movement down from that prior high. So we're watching for even harder evidence to gain more confidence on further upside to be had there. Also, BlueScope Steel remains in a longer term uptrend. However, we're currently seeing a healthy sideways consolidation phase. Now, this is taking the shape of a descending triangle with one final probe down required to complete the pattern. Initial weakness was brought up, resulting in prices breaking through the upper boundary of the pattern a couple of weeks ago, and it's now important that price doesn't head back towards the apex of the triangle. Otherwise, a failed breakout will be the end result. If you're holding positions in BlueScope, continue to respect the initial stops that we've mentioned, and it's too early to reduce risk on that trade at this stage. Silver looks pretty interesting. In strong economic times, silver becomes heavily in demand, and if economic growth does take hold over the coming years globally, then prices are likely to be well beyond where they are now. Mining costs for silver producers have plummeted over the past couple of years, and already we're seeing big miners expanding and producing solid revenues as part of this low-cost environment. That said, the technical situation for silver remains less convincing. We've been proposing the possibility of a bounce higher, but we'll only get confirmation of that above 1873, which doesn't look likely at this stage. Price symmetry and time symmetry are suggesting a move lower rather than higher, with 1581 being a key number to keep an eye on. If prices break below that, then a move back to 1409 would not be out of the question. We continue to see current movements as churning and should remain a feature of the chart for some time to come. And from a trading perspective, this churning trading range is likely to be quite wide, so there will be plenty of opportunity to trade profitably in either direction if and when low risk opportunities start to present themselves. So check out the Global Chart Research and we'll update those when they come along. With regards to our portfolios this month, the mean reversion systems, especially in the US, are taking up the slack of some poor trends in the large caps here in Australia. Mean reversion systems have been quiet over recent times, especially in the US, with a distinct lack of volatility having an impact. However, this month has seen a little more activity in the tech stocks, and they've been quite active, and as a result, we've seen some good gains in those mean reversion strategies. The trend systems have been reasonably flat so far this month, at least in the US. However, the ASX small cap trends have regained some of the losses that we saw last month. We retain a reasonably defensive stance here in Australia, and personally, we're still just 65% invested, so not overly committed to the upside at this stage. And it's not too long to the end of the financial year, so we may see some added volatility next week. Expect to see some window dressing by the funds. Thursday will be pretty active. Number of stock options, expire, and a large contingent of stocks also go ex-div on Thursday. And lastly, a reminder that Noosa Palooza is just 4 weeks away. And as we're coming into the end of the financial year, now is a great time to secure a ticket and claim it on your tax. Just visit thechartist.com.au, click on the Noosa Palooza button on the navigation bar, and we'd love to catch up with you in Noosa next month for Noosa Palooza. My name is Nick Raj, and I'll see you on the charts next week.
On the Charts with Nick Raj, brought to you by The Chartist. Join Nick and the team at Noosa Palooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosa Palooza in the menu for details.